Well, hello, investors and traders. I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened today. What does it tell us about the coming ones? Do the show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. And of course, it's under the channel, LA Little. As far as what happened today, it was pretty much a down day across the board. The only place you had rises was over in Europe, but that looks like it's probably a one-day wonder. We'll take a look at those here in a bit. Across the board, losses in the U.S. markets and a big loss again in the Russell. That's 2 days running. The Russell's dropped 3.5% almost. So you've got some pretty bad underperformance 3 out of 4 days in the Russell. Actually 4 out of 4 days. The Friday was an underperformance as well. So small caps not feeling the love. You're not seeing much in Asia. Oil, gold, all the commodities hammered, and the dollar wasn't even hardly going up. Speaking of the dollar, we should probably start there. If we look at it, we spike up right to the top of the breakdown bar. That's probably as far as it's going to go. And if the dollar's not going to go any higher, then we should see the euro stop its pullback and start to flip around and go back up, which of course is going to put pressure on commodities. Or not pressure, but it's going to help commodities if the euro is rising and the dollar is getting weaker. And those commodity trades today, of course, were a world of hurt. If you look at any of them, I'll start just say with some gold stocks. You can see the gold stocks themselves come down to a full takeaway bar. You get the same thing here on gold itself. If you look on any of them, of course, oil is a whole different story, but oil with no limitations on what they're going to drill now. West Texas Intermediate was at about 37.5 today. You had a 5.5% drop on it. You got a 6.5% drop here on these ETFs. If you look at the where's the GGC or GCC, which is the continuous commodity index, you can see this thing just getting wiped out today as well, going back down to test the lows. So commodity space hammered, and that took place even without the dollar making that much of a rise. Tomorrow's going to be an interesting day. If in fact this dollar does start to pull back, it's going to be curious to see if those commodities flip around and go back the other way. As part of all this, of course, debt continues to get hammered. Here's the high yield corporate bonds coming down to test their lows. That's on a daily. It's also true here on a weekly. And if you look at it on the monthly, it doesn't matter what time frame you're on. These continue to feel the brunt of the selling force that's against them. And if you go to something that has even less value to most of these, junk bonds making new lows already on the daily, on the weekly, they're breaking down, and they're coming after the lows on the monthly. So the debt structure, a lot of problems. You got commodities getting, pretty banged up, continue to get sold. Yet you have the general markets holding up. And the question is just how long can they do that? Is the seasonality going to keep them up there? Or is there something else going on that we don't really see? So when we come back, we'll take a look at our markets, look at the European markets, and just look at the bifurcation that exists in these markets in general. Be right back.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So as we come back here, let's pop over to Europe first, where the DAX, you can see the little move up. If you happened to watch the show last night, I was talking about that we were probably going to see a bounce in these markets that would set up more than likely the ABCD structure to take it back into this swing point high. That swing point high hasn't been tested, and in fact, if you're wanting to buy these markets, this is going to be the spot to be thinking about it as it comes back into here. You've got some good probabilities associated with it at these levels, and this would be the place where you'd want to think about coming back in on the European markets. If you look at the CACs, it also does the same sort of action, goes up a little bit weaker. So you have a big spike down, little bounce. Now you're getting ready to set the structure to get it deeper. Now this one has actually got the retest regen up here, but of course it's a different one than the DAX. This one's already been tested multiple times, so I doubt this one's going to hold. You're going to trade deeper, maybe down into this area probably as a result of that. And so the real test is not going to be in Europe now. The real test is going to be in the US, and that's going to be whether these US markets can hold higher with pressure on the European markets, because for quite a while now the US markets have fed off all the QE coming into the European markets. So here we go with the S&P 500. Today it pulls back. The volume is a little bit lighter. It doesn't really have a good tail here from what I can see. Just a small pullback off the highs. All in all, actually held up pretty well considering the way the rest of the world traded and the way the oil market was collapsing today. Same thing here on the NASDAQ composite. A little bit higher volume, but again, just comes back in a little bit. Doesn't look too bad in terms of the structure. If you look at the NDX, same sort of a feel to it, even stronger, and has been all year. The real weakness is over in the Russell, and the Russell, again, as I was saying, it's underperformed 3 out of 4 days, or actually 4 out of 4 days. It's down here eating into this big bar now, and the only thing I can say good about the Russell is at this particular point off of this bar is it's barely holding this area. So you know, there's a slight positive to what you see here, but I don't like these kinds of bars because they were actually a reversal bar. So that was a lot of selling pressure, not buying pressure on that particular bar. I think the more likely case is for it to try to make it all the way back down to here, and that's going to be the real test. You got 2 swing point lows there, another one over here, and another one there. So what does that mean to me? That means you've got a lot of potential for issues if you start to break down this area, and that is going to be a key area if the Russell keeps barreling to the downside. If we go back over and look at the S&P, for example, you know, and look for swing point lows on it, you have one here, and then the others are fairly far, you know, below that. So you're not going to get a big push to the downside on these charts unless they stay up here long enough to where this ends up being a swing point low as well. You're 3 bars into it, that means you'd be into the first of the year when that comes about. If you go back over, and I didn't show it on the Russell, but if we come back over here, it's the same thing. You don't have 3 swing point lows on the weekly. You don't even have one. This thing would need to go another 2 or 3 bars to make that happen. So if you think about the time of the year, and you look at these charts, the real risk is going to increase as you come into the next part of the year. So the new year is where you're going to see the risk structure begin to increase if these markets can't lift. So in other words, if they stay up in this area and they can't lift, they can't get up here higher and higher, you're going to see more and more risk develop as a result of that. So as a final tonight, I'd like to call your attention to the bifurcation that exists here in these markets. And what I mean by that is, in some of these markets, some of these sectors, you actually have some extreme bearishness going on. You've actually got on like the XLB, the basic materials, you've got bearishness on the long-term time frame. You've certainly got it going here on the intermediate, and you have kind of momentary strength, if you will, taking place on this short term. And so, here in the midst of a market where most of the indexes are within, a couple percent or less of their all-time highs, or certainly this year's highs in all cases, you've got some extreme weakness coming into other sectors out there. Certainly we know that the XLE has the same sort of thing going on, extreme weakness in it, bearish across all time frames. And if you look at the oil services themselves, right, you're bearish across all of these. You're basically bearish across these. Again, momentary strength there, but these sectors are extremely weak, and they're not getting any better. You're not seeing the rotation in those sectors. And probably the most troublesome part about this is if you look at the transports themselves. I've talked about the transports off and on for some period of time, but if you look at them, you still have this extreme bullishness out here because they haven't transformed their over to the I'm looking for the monthly here. They haven't broken on that swing point low yet on the monthly, but they're mighty close to it. I mean, that low was tested already. They still can't lift. They're going to come after it again. If they break it, the transports are going to be in a bearish state, right? A bearish trend on the long-term time frame. And those long-term time frames do not change very often. And so, you've got extreme bifurcation where the market's almost at highs in most cases, yet you've got major sectors in bear markets. That can't go on forever. I mean, it has to be resolved one way or the other. The fact that those sectors do not have large weightings is why this index can still hold at the highs. But that itself won't last if those sectors can't get rotation. In other words, if you can't find value in sectors that are in bear markets, at some point the other sectors are going to come join them. That's it for tonight. Thanks for joining me. Tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have a great night. I'll see you next time.